Good evening. Hello, everyone. It is Sunday night, the 4th of October, 2020. This year is just going crazy fast. Anyway, my birthday's in 10 days, and you just suddenly become aware of how quickly time is going by. So it is Sunday evening before the market opens. It's going to open in the next 50 minutes, and so I'll see if there's any gaps that happen. What I want to do before I kick off is just have a look at the news ahead and kind of quickly recap, because I think it's quite it's going to be very eventful for the next 30 days. But it is I think we've had an eventful week last week, and let's just talk about that very, very quickly. In terms of what high impact news is scheduled for this coming week, what I'm going to be looking for, I will always be focusing on US dollar high impact stuff. So we've got non-manufacturing PMI out on Monday. We have got Powell speaking again on Tuesday. Mainly Wednesday is going to be a big one as well, the FOMC minutes. Now, effectively, there's still a contraction within the economy, and so therefore there is a bit of a sense of kind of what's going to happen in terms of stimulus, what's going to happen in terms of kind of rates, and so there's going to be an eye on these events amongst other things. And again, this might have an impact in the UK in terms of Governor Bailey speaking on the Bank of England. We've got the European Central Bank, Lagarde speaking. And so kind of having a week of these, my expectation is a volatile week. And I anticipate there will still be money-making opportunities. But as well as the, Royal Bank of Australia rate statement, there's just going to be volatility. So the way I'll be approaching it is just to be cautious on those high-impact instruments are, in the 3 or 4 hours running up to those events, see how the market reacts to them, and then kind of step away from that, or at least then decide whether I'm going to get back into the market and have a look and see what's happening. And even with swing trades, I might be a little bit more aggressive with taking profit and updating my stop loss, and just a little bit more cautious in terms of potential outside bars or big days where the market swings in different directions. The only other thing that I wanted to add to this, of course, is if you aren't aware of it, of course, in the US, President Trump has been kind of, I guess, is under watch at the hospital in terms of concerns over his health. Now, the problem is there's a confusion in terms of mixed information coming out, and there's not a lot of transparency in terms of what is the state of his health. Now, the reason I'm talking about this is because this could end up being a factor that could impact the market certainly over Sunday through till Tuesday, until there's a sense of what is the state of the health of the US president, effectively. Okay, it's a serious thing in terms of, it's obviously always a serious thing, but this is just in terms of the timing and the run-up to the election, this is relevant to be aware that this is a serious situation. Right, so having brought all this up, let's go across, let me have a look at what's going on in the charts. Okay, so we're now officially in an uptrend on the daily. In terms of that, we've got a potential swing low here. Again, as I said, price has pulled back into this area, which was a nice weekly retracement. We've also produced a bearish weekly candle. So here's the issue here. We're up against monthly resistance. And so there's that decision from last week where I was looking to see if we produced a bearish candle. This week has unfolded, and this is where this week is now to see what's going to happen. So is the daily trend going to continue up, break up past above 95, which would negate this weekly downtrend, or at least this particular setup, or is it going to follow through with that? In other words, is this resistance going to hold, and the market is ultimately going to break below the low of this and head below that weekly low, which is going to be 93.56, call it, and then start to resume and head down towards 90. And so I'm going to be watching the daily for that to see if we get a lower high, and also I'll be watching the low of that weekly, the low of this weekly candle to see if that ultimately unfolds. So if that's the case, and if that does happen, then my expectation is to see price start to head lower down towards 93, 92, and even lower. And then that would constitute a weaker US dollar over the coming week. Looking at Euro US dollar, this is what's happened. Price has crisply and very cleanly broken through support, come back, and encountered resistance up here, and now produced a bit of a swing high here. And therefore, the idea that it would head lower actually does make sense. At the same time, we've got that bullish candle setting up here in the weekly, and a break above the high. That means that market's actually going to go higher. So then we would have that stronger euro, weaker US dollar. So again, we've got that annoying contradiction where we look at the monthly, and again, I would still prefer, it would make more sense to me to see price come back down to connect with this. So when I look at the daily and I look at the monthly, the probability, or at least price action, is indicating it wants to continue to head a little bit lower, which means that we would continue to see the dollar strengthen temporarily, and that, or at least that we would see the euro weaken. which will certainly make the US dollar stronger. So this is the problem, and really what it comes down to is the high and the low of this weekly candle. A break above the high means that the weekly trend is going to resume. We're going to start to see the US dollar weaken and the euro strengthen, and a break below the low of that, okay, would be the daily continuing down to the next level, which is 1.15, which is what I'd like to see. Is it possible for the euro to weaken and the US dollar to weaken? It is, but it gets really messy when we get there. So looking at sterling, sterling has retraced almost all the way back up to this previous high, which is also a level of support and resistance. It's produced a bullish candle on the weekly, and so the idea here on sterling's basis is that it looks like it really wants to turn around. It's done a full retracement, sitting on fib levels. It really would like to continue up, which implies a weaker US dollar. And again, we've got that darn contradiction, excuse my language, but we've got this rejection on the weekly, I beg your pardon, on the monthly, and a break below this would see this continue to weaken. So it's frustrating because we've had it for a couple of weeks, but it makes sense. As we're running into it, the dilemma has kind of unfolded ahead of us and now sits there. So we've got effectively kind of a bullish setup on the daily, a bullish setup on the weekly, and a bearish setup on the monthly, and we had a similar conflicting kind of setup on the euro dollar. It's one of those ones where, as I said, probably the best way that I'm going to approach this, the most sensible way, is a break below or above the weekly candle. That will give me, should ultimately give clarity as to which one is ultimately going to win out. If it breaks above the weekly candle, we're going to see the trend continue, the weekly trend continue. If it breaks below that, we're going to see this monthly trend kind of continue down. So again, a lot of these daily charts have produced bearish setups, which imply that the trend on the daily wants to head lower, but the weekly wants to head higher. We've had a lot of this lately, and the reason for that is actually pretty straightforward. In the bigger picture, there's just general uncertainty. And so the uncertainty is between the longer term timeframes, the medium term timeframes on the weekly, and the shorter term timeframes on the daily. And that uncertainty is as a result of all the different things going on at the moment. Okay, and so we've got this kind of pause between what's going to happen. We'll look back 3 months from now, and the answer, obviously, whichever one did ultimately win out, the weekly continued up, or the monthly decided to change direction, we'll see which one it was, but right now it's very difficult in the thick of it. Looking at Kiwi Dollar, this was a really strong rejection with bearish divergence on both indicators. This usually implies that we get a deeper move to the downside, and so again, but again on that weekly chart, it does look as though it's trying to hold above support. I'm inclined to think that this particular Kiwi dollar might head a little bit low, which implies actually a weaker Kiwi, stronger US dollar. And dollar yen here has also produced a lower high. Now, dollar yen does its own thing. Okay, it's on its own mission, and it has been for about 4 or 5 years at least. Certainly that weekly is trending lower. The flow of price, the momentum is bearish, and it could break below that level of support at 104.50. It certainly looks that way on the monthly. It's really struggling to hold above that level, and I'm not really going to participate in it until it commits below that level. But that is certainly something I might consider doing as a short trade down towards that, some intraday trading down towards this level. The flow of it at this point in time, and unless it ultimately is rejected, you can see there's a bit of bullish divergence here. We've got a lower low between these lows. We've got bullish indicators here, but at the same time, it's just the pressure just over, going back to 2018, it's just almost 2 years down the line, it's just pushing lower and lower and lower. And ultimately, we could see that actually happen. Okay, so that would imply, again, in that situation, a weaker US dollar. And seeing as dollar yen is probably one of the other biggest currencies traded against the US dollar other than the euro dollar in that order, it can have an influence on it. So then, having a look at dollar Swissy here is now in an uptrend on the daily, but you can see that potential for that weekly downtrend to continue down. So again, this weekly candle is sort of roughly inversely correlated to the euro dollar. I'm looking for a break below the low of this to see if we continue down to this, or if we break above that, and to see if we head up towards this level here. So both euro dollar and dollar Swissy have not retraced enough, in my opinion, on their weekly, and it just adds extra caution. Plus, you can see here off that monthly we've produced a swing low, but we haven't actually retraced back up here. So if I take that into account, both euro dollar and dollar Swissy, there is a fair 50-50 probability that they could continue on upwards this week. It's not helping. I understand. I'm looking for clarity here. There isn't. It actually means I have to take everything on a kind of a basis by basis, kind of look at a case by case basis. Kind of an uptrend here again on dollar CAD, similar to dollar Swissy, but also a nice downtrend here on that weekly side. And a break below and above would give more clarity on that. But again, the monthly looks more bullish than bearish in this case. It's almost like it wants to continue up. So kind of in summary, having a look at this, I'd look at individual cases. If, for example, all the euro pairs are bearish or bullish, if there's some correlation there, then I'll trade in line with that. If GBP pairs are bearish or bullish, I'll trade in line with those, much more than at the moment kind of what's going on with the US dollar. And obviously I'll be able to assess it on Monday and again on Tuesday, having a look at that to see which side is going to win out. Is this downtrend, daily downtrend, going to continue lower, which actually is perfectly acceptable here, which still could ultimately reject that level, come down, reject that level, finish as a bullish candle, and therefore it would still be a bullish setup to resume the uptrend. And that's actually a way to get both boxes kind of satisfied. The contradictions would both resolve themselves. This would become a nice little bullish rejection candle off those lows. It would actually allow the daily to trend lower and then reverse it, which would allow the weekly to ultimately resume its uptrend in a couple of weeks' time. And it would allow that monthly to do that retracement. So that is a very rational kind of fair assessment. And if that is the way it's going to unfold, it implies that this week we're going to see the market head lower first, back down to these levels, and then head higher, either towards the end of the week or next week. That would be really interesting to me if it did ultimately unfold that way. So that's what I'm going to be looking for, breaks above and below the weekly, and kind of keeping an eye on that daily on a 4-hour time frame as well. And otherwise just trading with some kind of common sense and keeping an eye on the news, as well as just the general news, as well as the scheduled news.